Good afternoon, good morning, good afternoon, good evening. Welcome to Develop Your Edge with Anthony Crudele. I'm your co-host, Tom Schneider, CMT with NinjaTrader. Before we get into the good stuff, I do want to remind everybody that futures and options trading contains substantial risk, is not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we want to recommend that you use risk capital. What is risk capital? It's money you can afford to lose. It doesn't keep you up at night. It doesn't extend your retirement horizon. I also want to remind you that past performance is not necessarily indicative of future results. And what we talk about here in this program contains neither trade recommendations nor financial advice, but should be used only for educational purposes. And with that out of the way, it is my pleasure to welcome back Anthony Crudele. Anthony, how are you on this very special day?
I know it's crazy. Today I start my 25th year. It's unbelievable. I can't believe it, honestly.
That is, I think that's longer than my marriage, Anthony. That's pretty amazing. We're almost there at
I
25,
know,
but
and I'm only 32, so it's hard to imagine that's even possible.
you are the youngest trader by a long shot in the CBOT history. But that's great. Congratulations. Doing anything to celebrate or just making good trades today?
Nah, yeah, just making good trades, being on Develop Your Edge. It's funny because one of the things that I remember when I first started my career was I spent several, years um, in the pits, learning from the best traders in the world and thinking that I had everything I needed to become a successful trader. So I was under the impression that because I was a clerk, a runner, a trade checker, I started when I was 18. I went through membership. I started to go through membership when I was 19, but I worked for a period of time. It took me about a year and a half until I was 21 years old to be able to finally get on the floor. But during that time, even when I first got my badge, I was working for traders because I needed the income. And I felt that I had every single thing needed to walk in and make money because everybody was making a lot of money back then. And the reality was that at the beginning of that journey, which is crazy. Like I said, it was 24 years ago yesterday. Boy, everything changed once you're in live action. I know many of you out there probably can relate. You were on sim and then you went and traded live and you lost, or you did things, you read books, you found the perfect indicator or strategy that you felt was like, hey, you know what, this is going to make me money. All I have to do is this. And then you realize as time goes by that you're always a student of this, and you're constantly developing your edge, which is, to me, sentimental in the respects that, like, I'm doing this show with you today, and I think with everybody out there, you constantly have to develop your edge. There is no end date to this. There is no something that goes, I figured it out. I mean, I would guarantee if you sat down with the heads of the top prop firms, the top market makers, the top in any aspect of this business, and say what you did to initially make money, is that exactly what you're doing now? And I would guarantee that every single one of them said, no, so much has changed. How could it be? That edge is worn off. It's changed. And so we are constantly in a development phase. And so to be here today, starting the 25th year, is pretty cool.
Yeah, no, hats off and props to you. I think that's an amazing accomplishment. And, what a change from, trading on the floor, being surrounded by people that you are mentored by and you're learning from. Fast forward 25 years and it's a completely different ball game. And that's one of the things that is constant, I think, in trading, is it's continuously evolving. And you've been there to evolve with it, and not only evolve with it, but succeed. Right. And that's part of that
Yeah.
developing your edge. It's constantly changing. So you have to adapt with it.
Exactly. I mean, and it's funny, the first strategy we talked about last week, I believe, that I ever built that helped me actually, turn into a profitable trader. And, I still use that strategy, but there's so much nuance to how I've executed it over the years and changed depending on what environment we in. I was thinking about it the other day. I've traded through the end of the 90s when everything was, just straight up, right? I started in the S&P pit in 19 95, 96-ish year time. And everything that I was taught was, just find a place to get long, pretty much, right? It was just one of those things where we were in the middle of that crazy bull market, right? And then you had the dot-com bubble burst in 2000. It changes everything. You have 9/11, which changed so much. I write a lot about this actually in my book when that comes out, and how I think 9/11 was the biggest change for financial markets, not only in just society, but I think financial markets. I mean, obviously it changed society, and everything we do is different. I mean, remember going on planes, how different that was, Tom?
Oh yeah. Yeah.
People were,
And you didn't know, there's a lot of anticipation and a lot of, yeah, it certainly affected your way of just doing anything. I was downtown there, a couple blocks away when it happened, and going back to work was different, and you remember the exchanges were closed for like 5 days. Never had happened since,
never had happened.
And yeah, so much changed that day. I can't wait to read your book, by the way, when it comes out.
Yeah, I mean, it's just like you go back and you think about how different I was trading from just in the late 90s to the early 2000s, and just like a switch. It was just a completely different mindset, because now the news became more of a factor. And then you move forward, and then you had crises in Europe. You had, global financial crisis. You have the HFTs and the algos coming in. You've had all of these different things. COVID, QE, QT.
Right.
I mean, it's anybody that thinks that they have found something that is going to last forever is just massively mistaken. And I look back at it, and like I said, to me, what I really love about what we're going to talk about today, and I actually put a tweet out about this, and I encourage anybody out there to go and read this thread. I just tweeted it literally 5 minutes before we came on, and I'm getting a lot of people to talk about it. Is, what is the one bad habit you did as a new trader that you still struggle to get rid of? Because it's so interesting to me, and I know today's conversation is focusing on how not to ruin your career, right? Because careers, in my opinion, are ruined really early on because of bad habits that you build as a trader. And it may not seem that that's the case, like that something that you could make a mistake of so early in your career could have such an impact on you later in your career. I actually see a couple guys that I know that have been trading as longer than me that put in some things in that tweet thread that I put in, and one guy said patience, right? Because you become very impatient. It's one of those things where you get rewarded in some instances, and your mind goes back to that time that you were rewarded, not the time that you were punished. Because in this business, all the endorphins, everything that goes with winning is what we feed on. It's like that last shot you made in golf that keeps you coming back, right? And you see a lot of people say that. And the reality is that is truly a bad habit that ultimately bites you in the shorts. And so I think that with today's goal for me is to get people to understand some of these habits that you're probably building or you've built on, and maybe help you remove them from a future incident. And I'm going to share one of the ones that happened to me in a future incident, that a bad habit I built that almost cost me my career.
Yeah, and we talk about patience a bunch on the bookend shows, opening range of bars closing. And you're right. It's again, I keep coming back to, there should be a whole course about sitting on your hands, right? Because you do get that endorphin rush when you make a trade and it goes your way and you want to repeat that, but the market doesn't care about that. The market might not have an opportunity for you to do that every single time of, every single part of the day. So yeah, there's identifying what works and what doesn't work. Also part of that is just being patient to find those setups or those times when something works and could work again.
100%. And I think I'm going to really focus on that patience aspect today, because even looking at this tweet thread that I put out there, it seems as though patience is the theme. And for these shows, I know, we're held by time, and traders are busy, probably maybe listening to us while they're trading the markets. And one of the things that I like to do in each and every show is really Just hone in on one single thing that maybe somebody can take away. And I have a whole list of things here on my pad that I felt were bad habits that I created, unfortunately. But some of them I've been able to completely get rid of, and other ones, they still kind of come back and resurface. And I think that the one that I have the story to share, and what I see here when we talk about patience, and even the Ask DYE tweet of the week, I know we're going to get into a good question about this as well, so it all kind of ties in, is react with reason. The over trading, the patience, all kind of comes into this react with reason. What does that really mean, right? And so let's talk about how patience is such an issue for so many people. And it's because of access. You could go and you can trade at any point in time. Right now, I could flip up my machine. I can go in, I can trade any stock I want. I could trade an option. I can trade an event contract. I can do anything. It's just right there at my fingertips. I don't have to think. There's nobody there to stop me. You could just go in and do it. And what's so different about the environment that I learned from watching pit traders was you had to actually vocally do something. You had to make a physical movement to go and do it. And so if you opened your mouth and you didn't want to, you're going to get hit, right? Even on 10, sold. Oh no, did I really want those? You better want them, right? And if you didn't want them and you're like, oh, I didn't mean that, and somebody's going to go, you know what? You're a scumbag and you're taking them, or there'll be a fight, right? That's how it worked. You were held to your word. So you were very careful about what you said. And that is not the case anymore. And so the screen breeds people to be impatient because FOMO's there, because of all of these things. And I put in to my Instincts ebook, React with Reason. And I wrote this ebook for myself. I give it away to traders, and this will be a big part of my book too as well. But React with Reason, something I put in to say, Anthony, this better be an instinct of yours. And I want to share a story that I think is extremely important to explain why React with Reason literally almost totally derailed my entire career after a decade in. Everybody remembers May of 2010, the flash crash, right? The notorious flash crash. And what's interesting about that week is I had just moved to Florida, and I had just got my screens in my office that week. And I'm sitting down at my screen, and many of you know that you could even come back from vacation and sometimes get to your screen and be like, wow, I'm like off. You don't feel right? Imagine going trading in an entirely new office. Even though you have the same screens and the same setup, you're just thrown off, right? You don't have that comfortability of just being in that situation. And there's a huge part of that. And so I remember sitting down at the screens that week, going to get lunch, being all settled, getting settled in my new Florida digs. And I look around and I see the market, and I say to myself, what is going on here? I'm watching the S&P just getting cracked. I think I had just come back from whether it was a late breakfast or lunch. And I'm sitting at the machine and I'm just watching the market come down. And I said, you know what? At the time, I'm trading pretty big as a trader. I mean, probably 50 to 100 lot E-minis at a crack at that time, or even more, depending on situations. And I sit down and I start buying a handful of E-mini S&Ps. And, buying one. And I don't know where I'm getting out of these. I just look at this and go, there's no news. I got my, Rand Squawk or whatever it was up, and I'm looking and I start buying them. And the next thing you know, I'm just getting completely destroyed, down 10 grand, down 15. I'm just like, what is going on? Right? It's blowing through thousands a second. And all of a sudden it started really escalating. And I bought a couple more. And the next thing you know, we're almost limit down. And I'm looking at my machine and I'm going, man, I am down mid 5 figures right now. What are you doing? On a small position for me. And at that moment, all I could think about is like desperation. Like, how do I get out of this trade? Because even though I've been doing this already for 12, 13 years, or 12 years at that point, something like that, I'm just scrambling because I don't even know where I'm at. Because all I can think about is just like trying to stop the pain. I'm not thinking about limit down. I'm not looking at the news. I'm just like, where do I go to get out of this? Because the market was moving so fast. I finally get out and I'm like, okay, what just happened here? And I go back to that lesson. If I'm trading my normal size, I'm done. Who knows what happens? Could be completely blown out. 2009 actually was a losing year for me. I'm moving to Florida, getting my composure back after having a great run, going on a slow run. And all of a sudden I do something stupid like this to where I'm almost taking myself out of business. And it was because I didn't react with reason. And that comes into the patience, that comes into all these things, because in order to have patience, you have to know what you're looking for. If you don't know what you're looking for, you can't be patient, because you could be patient for setups that are totally crap, but you don't know. And so it's putting in a structure that you know exactly what you're looking for, and you react in every instance with weakness. And going back to that day, and here's me, a veteran at that point in time, and I'm literally putting myself in a position to be blown out of the markets because I made one simple mistake that in the past, what have I done? Oh, we're overbought. We're oversold. Step in, buy a few, try to make, two tick chump, right? No, and trying to make a few ticks. Next thing you know, I'm just getting buried. And you're like, oh my God. And you have a weak hand in the market at that moment. Because now at that point, you don't know where you're wrong. You're just like, next thing you're either averaging in or you're trying to do something to cover up a mistake that you've done. And in the past, you've had some success with it. And typically the markets aren't going to do what it did on that day. But I just so happen to do it on that day. Why? Because I built in a bad habit. And so the moral of that story is that when I sit down now, I still think about that subconsciously going, what are you doing, knucklehead? Do you want to put yourself in this position? Do you know where you're getting out? Why are you stepping in? Traders think that they see edges all the time because of access. You've got to be able to remove yourself from that situation. And so when I say bad habits are what ruin your careers later, that's something that almost ruined my career over a decade in, because at that moment, I think I'm the smart guy. I'm going to sit here. They're overbought. I could withstand a little bit of risk in a small position. I don't need to worry about a stop. And boom, next thing you know, I almost lose a Range Rover. And
Wow.
That's reality.
And you were, that was not just you, right? That was face ripper for so many people, right? That day was such a dramatic change, and you were one of how many traders that felt the same way. I mean, it's not like a rookie mistake that was happening that day. That was, like you said, experienced traders, but those habits that weren't too bad before, it was exaggerated on that day.
Yeah, everybody, you just got to remember, and I'm seeing a lot of these other bad habits come in on Twitter, and people are talking about over trading. Some of these are really hilarious. Just go in there and read them. Bourbon, screwdrivers at 10 a.m. in the Merc Club. I always love these threads because you pull out some of the most fun stuff. But lack of patience, over trading, chasing, forcing trades, closing, losing position too late. These are things we can all relate to. And the thing is that they get embedded into, really, I don't want to say your DNA as a trader, but because they can be removed. But it's one of those things where when you start to do things that is a bad habit more than one time, and it keeps coming back and surfacing, those are the things that ruin trading careers. And so I think with the one thing I want to really just leave with today, before maybe I want to go and look at some charts. It's always fun to go to the NinjaTrader platform and look at some charts because I want to bring some context to the current environment. But is that whatever your bad habit is, and most likely many of you have that same bad habit that I have and many other traders do, is you've got to build an instinct within yourself. You've got to start building that self-awareness that when that happens, recognize and fear how that could potentially ruin your career. Because if you don't have that little bit of fear in your body to bring that to light, it's gonna bite you at some point. You don't know when, you never know when, but at some point it happens, and it happens fierce, and it could totally, it could ruin your career, or even, more than just your career. It could ruin you financially. So, markets are nothing to mess with. And it's just one of those things where you have to, in order to get rid of bad habit, you have to fear the consequence. And for me, after having so many wake up calls, I don't know why I need so many, Tom. It drives me crazy, but we do sometimes need them. And I'm hoping that many of you don't necessarily need one. Take it from me and my wake up calls, and hopefully that can help you in the future get past some of your bad habits.
Awesome. Thanks. And thanks for sharing that, Anthony. Right. I think if, a bad habit, how long can you tolerate that bad habit until you realize you have to change it, right? If it's severe, like it was in the flash crash, yeah, okay, that's going to be a wake up. But if if it's a dull ache, well, okay. You'll have to decide if you can stand that dull ache or you want a sharp pain.
Yeah, no, exactly. And what I'd like to do actually is, if we could do it a little early, I'd like to go to the Ask DYE question
Sure,
before I
of
go to the
course.
charts. And
Yeah,
that's a great question this week.
right. So every week we have a question that you, the viewer, can submit through Twitter, and we will reward you if you live in the United States. We will send you a prize for participating. You just have to be subscribing or following, rather, on Twitter. You have to follow at NinjaTrader.com. And if we could throw that Twitter up, that would be great. That tweet up, I should say, not the Twitter. And so this is the tweet of the week. It's basically how many times. Let's see, and I'm having trouble reading this, so bear with me one moment as I blow this up. How many days a month do you not take any trades? So this was submitted by Jason MacArthur, CFA. Jason, just please make sure that you're following NinjaTrader.com. And if you want to also, viewers out there, want to submit your own question, Ask DYE, hashtag Ask DYE in the question as well. It'll make it easier for us to find your question. But Anthony, how many days a month do you not take any trades was the question this week.
And what did we say throughout this whole episode today? React with reason. And if I follow that, then there's really no number that I could put out there that would actually tell me how many days, right? Because it's all about the days that I have reason. And I know that sounds so boring, right? It's like, I almost feel like I sound like one of these people that's like pushing a sub or something. That's like, oh, come in with me and I'm going to tell you this. And I don't have that and I don't do that. But the point of it is that if you believe in your homework, then your homework will dictate the amount of trades that you take. And then you have to start putting in the context of the environment, right? Look around and what's happening in the environment. And that's why I want to do this, because I want to go to the charts next and I want to talk about what I'm seeing in the markets right now, because I think it's pretty interesting. And then that will dictate it, because I will also take trades to where I'll look at a swing position, or I want to be in just directionally. And maybe I'm not necessarily getting that short-term day trade, but I'm like looking at the chart saying, well, directionally right now, I want to be this way. We talked about this earlier in the year where I just stayed long some E-mini S&Ps. And I talked about that, because I just felt directionally that was the play. And I'm not trading every day, because I just know that I believe that we're grinding higher. And so it always comes down to the structure you put in for your day trading, and then also understanding the context of the environment, right? Like, what is happening today? What is happening in the market? And so let's take a look at the charts. And it's a great question, because I think that you really have to treat this as though you're being forced to do something. And I know that kind of sounds weird, right? Like, why would I want to feel like I'm being forced to trade? And it's because of the access. And I keep talking about this so much, because when you have access to markets the way that we do, you have to put up barriers that force you to click in, versus just having the freedom to just click in because you have money in your account. And that's the mistake that I make and everybody makes continually. So I think that that's the reason why you have to think to yourself, I'm forced in, and I have to fear, doing this bad habit of over trading or chasing, or these other things we talked about. And so that's why I like to step back every week. And so I pulled up here on NinjaTrader, and I pulled up the daily chart. We're going to start with the E-mini S&P. And everybody knows, if you follow this show, or if you've even followed me pretty much on social media, you know that I like to use Bollinger Bands. You know, I like to use auto-anchored VWAPs to the beginning of the months, beginning of the years, beginning of the days. I'm always anchoring to the beginning of day sessions. I like that. And I like the RSI to really give me an idea of where the market is. Are we aggressively buying? Are we seeing buying, or aggressive selling? Is the market getting, extended one way or the other? And what I find really interesting about right now is this. So I drew two horizontal lines here. I got my Bollinger Bands, right? I use 20 period, 3 standard deviation Bollinger Bands. I don't use the middle Bollinger Band. I don't need it. I have an anchored order flow VWAP. I have actually at the beginning of each and every month. So it shows you when we're above the market, it's green. When you're below it, it's red. And then I have the RSI standard settings, and then I have horizontal lines. And the horizontal lines, what I did was, where did the previous month's VWAPs end? And what are we doing relative to them? Because what we're starting to see is the market made a low back here in the beginning of the year. Low of the year is the first day of the year in the E-mini S&P, okay? Then we went up and we made a high. Then we have these VWAPs that are calculating volume weighted average price. Then you have these horizontal lines that I drew to see where did the previous months end, and are they going back and just kind of cleaning up and taking care of business, or what are they doing? What's the market doing? Because is the market really kind of balanced, or are we staying on the high end above all the VWAPs? Are we staying below them? Last year, we kept staying below them, below them, below them. And when you notice is that no matter what happened, every time we get above that VWAP, it'd be great news. The market will completely come behind below it. This year is a tale of two sides. And so it's very important to understand this, because this will help you be patient and dictate your trades during the day. So when I see that we're going back, look at the recent lows, the last couple of days, even today's low. It's where the VWAP ended on the first day of the first month of the year. And look at the recent high, right? If I actually move this exactly to it, it's almost the exact pinned high from 4 days ago. So we're basically staying inside those previous VWAPs. And look at where this VWAP is. You guys know I love my Bollinger Bands, and I love to see my horizontal lines and where the anchored VWAP is relative, and it's right in the middle of the two. So this month's VWAP is in between Febs and Jans, right? We're trading in between it. Bollinger Bands are flat. Expect a two-way tape. So you understand, it puts context into your day trading. You get a short early in the morning, or a long early in the morning, or a short late in the day, a long late in the day. The market is doing mean reversion. It's telling you this on the daily. So you're not seeing a lot of trend days or trend weeks. And we go into the NASDAQ. NASDAQ looks a little bit different, but we know this, right? NASDAQ, you go back, we're above the January VWAP, which they never went and tested, because the NASDAQ is stronger this year. It's the upside leader, and it's spending more time towards the February VWAP, and it's spending a lot more time above the VWAP for March. There's no days where it's closed below it. So the NASDAQ is the one I'm more aggressive to trade long. The S&P is a two-way tape. I talked about this last week. We have back and forth divergent tape. NASDAQ's the one I'm more inclined to want to be long. S&P to me is a two-sided tape. And so just to tie all that in, it's like, react with reason. Are you aggressively short NASDAQ on an overblown rally? Are you aggressively long S&P, maybe on an oversold sell-off? When you put the context of the situation there, it'll tell you what more to do. And that's all we could do, everybody, is build barriers around ourselves to keep ourselves from going back to these bad habits. And so technicals are things that we lean on for that to help us.
So with that bias, what you're saying is currently NASDAQ is a little stronger than the E-mini. So if you're biased for the day, you're looking at what, the different markets, you're saying, boy, today looks like it could be a long day. You're focusing more on NASDAQ because the longer term view seems to be stronger. We're trading towards the upper end of those, monthly VWAP levels versus the E-mini. If you think it's going to be a short day, then you might go into the E-mini, or even, looking at Russell or E-mini Dow, you might look at those as well.
Correct. And to me, if you're trading the indexes, I know that the NASDAQ and the S&P are very different. I might just do a show on this at one point, that they have very different personalities. But if you're trading both of them, if you're trading all of the indexes, understand that you want to be more inclined to take the NASDAQ long if you get a long setup in the NASDAQ over the S&P. And you don't want to be buying the S&P because the NASDAQ's railing. You want to be buying the strong, and you want to trade the weaker one, or the sideways one is a two-way tape. So put that context into the current market environment. And so when you see that, and the NASDAQ is stronger in relation to the other markets, why would you try to sell the strong? You want to buy the strong because it is the leader. And I think that's a mistake that a lot of people make. And so I'm always saying to myself, if I get a NASDAQ long setup, I force myself into that trade.
Great. Awesome stuff. Anthony, I know you probably have a little bit of business before we close out.
Yeah, I wanted two things. One is go check out this tweet. I think it's really tied in today. I think a lot of traders can go in, and I'd love to hear what your comments are on what is the one bad habit you did as a new trader that you still struggle to get rid of. And maybe we'll talk about that in future Develop Your Edge shows. So I'd love the participation. Of course, hashtag AskDYE, and also follow NinjaTrader on Twitter. And then I want to talk about micro treasury yield futures, because everybody's talking about the yields right now. Look at the 210. Look at all of these things that are happening with yield curves, and everyone's talking about interest rates. Of course, that is the main focal point, especially on the macro side of things. And also, I think on the technical side of things, there's some great opportunities. You can go and trade micro treasury futures. I know they're available on Ninja, and you can go there and trade them. And then you're trading the actual percentage of the 2-year, the 5-year, the 10-year, and the 30-year. And you can learn more about these products at cmegroup.com. I think it's one of the best tools, if not one of the best markets that CME has added in the past year or two. It's a great thing to keep up. Even if you're not trading it, pull up the treasury, micro treasury yield futures, because you can actually see what the percentage is on the 2, 5, 10, and 30-year yields.
Right. And you mentioned, it's just the biggest thing in the news right now as we're talking about what the Fed's going to do. They're looking at these rates, and you can too with these futures.
Yep, absolutely.
Awesome. And I see that your Twitter feed looks back to normal. Knock
I'm
on
back,
wood.
baby.
No longer an NFT CEO or whatever that was.
That was the Porsche NFT SF. I don't even know what it was. I couldn't look at it for a while. It was driving me nuts.
Well, all back to normal, and that's good. I want to thank everybody for coming. We'll be back here in 2 weeks. Next week, Anthony is doing some business on Thursday. What are you doing? You want to explain what's going on?
Yeah, I mean,
Thursday?
everybody. Yeah, so maybe some of you might even be out there. It's the FIA in Boca. It's a conference for futures and derivatives markets. And so I'm going to be out there and just talk with people in the industry. It's always important to go beyond the charts and get the pulse of the industry. You get a lot of people there talking about what's happening and impacting our industry. It's a lot of regulation talk sometimes, but I could tell you this. I remember going to it the first time, maybe it was about 10 years ago. And I remember hearing so many people talk about crypto. And I was like, crypto? Are you kidding me? And I heard it first there, and look at how big crypto came. So it's pretty interesting. If you ever have an opportunity to go, it's pretty cool. There's one in Boca, Chicago, Singapore, and London. I've been to all of them. So I've been all over the world at this. Yeah.
That's amazing. I've only been to the Chicago show, many years ago, but well, have a great time. We'll miss you for sure. And can't wait to see you in a couple weeks when I'm out there. And we'll be back here in 2 weeks for Develop Your Edge. So want to say again, thanks, Anthony. Congratulations on your anniversary. And thanks to all the viewers for coming. And we'll see you in 2 weeks.
See you, everybody.